Session 43 of Unit 4 of Taxation of 5th semester BBA of Mangalore University. Let us solve the problems on computation of total income. This problem appeared in November 2014 for 4 marks. Quality Electronics Limited is a domestic company in which public are substantially interested. The following particulars of income in respect of the previous year is given. Interest on government securities, income from business, short-term capital gains, long-term capital gains, dividend from an Indian company, dividend from a foreign company, book profit. Compute company's total income and its net tax liability. So here first we have to compute the total income of the company, and then as the book profit is given here, on total income we shall compute the tax liability at normal rates. So as this is a domestic company, tax rate will be 25% on the total income. At the same time, on book profit, which is 9 lakh rupees, we shall calculate MAT, that is minimum alternate tax, which is 15%. And at the same time, on the tax, we have to add health and education cess at the rate of 4%. So the normal tax and the minimum alternate tax, whichever is higher, will be the tax liability. Let us see the computation of total income. So we are adding the incomes under all the 5 heads. Now here we have income from business, capital gain short term as well as long term, income from other sources, interest on government securities 20,000, dividend from Indian company is exempt, dividend from foreign company 10,000. So the total will be 5,78,000 as there are no deductions under section 80. This gross total income itself will become the total income. Now let us see the computation of tax liability. The total income is 5,78,000. So first we shall compute tax on the total income. In this problem there is long-term capital gain. So on long-term capital gain, which is 33,000, we shall charge tax at the rate of 20%. It comes to 6,600. Then on the balance 5,78,000 minus 33,000, we get 5,45,000. On this, at the rate of 25%, it comes to 1,36,250. So if we add, it is 1,42,850. Add health and education cess at the rate of 4% on 1,42,850 comes to 5,714. So if you add, you will get the tax liability 1,48,564. At the same time, we have to calculate minimum alternate tax. Minimum alternate tax, that is tax on book profit on 9 lakh rupees at the rate of 15%. It comes to 1,35,000. Add health and education cess on 1,35,000 at the rate of 4%, 5,400. So tax liability is 1,40,400. So the total, we shall see here, compare here, the tax liability which is at the normal rates is 1,48,564 and minimum alternate tax is 1,40,400. So whichever is higher will be considered as the tax liability. Therefore, the tax liability A or B, whichever is more. So tax liability is 1,48,560, which is rounded off to the nearest rupee 10. This problem is for 20 marks. It was asked in November 2014 as well as November 2019. Here, profit and loss account of X Limited, a domestic company, is given. Profit and loss account is given. So as profit and loss account is given and the net profit is here, first we have to find out the business income. After finding the business income, Here there are some items like long-term capital gain. So we shall add the other heads of income and find the total income. We need to consider the other information which is given here. So this is one, that is to find the total income. At the same time, we have to find the book profit. We take net profit and then find out the book profit. So we have to prepare two statements, one to find the total income and another to find the book profit. Then finally compute the total income and tax liability for the assessment year. Apply MAT provision. So on the total income at the rate of 25% plus health and education cess at the rate of 4%, and on the book profit at the rate of 15%, that is MAT at the rate of 15% and health and education cess at the rate of 4%. Whichever is higher is considered as the tax liability. So let us see the solution. Computation of total income for the assessment year 2020-21. First we are considering the net profit, add proposed dividend, provision for unascertained liabilities, general reserve, income tax. So whichever like provisions or reserve and income tax, whichever are not actual expenses of the business, are added back to the net profit. Then less capital gain, which is long term, which is not connected to the business, general reserve as the amount is withdrawn, and GST rupees 50,000. These items are deducted, and then less unabsorbed depreciation. So we get the business income. Then add capital gain, which is long term, less brought forward capital loss. After adjusting, you get the capital gain 2,20,000. So when you add this together, you get the gross total income. As there are no deductions under section 80, this itself will become the total income. At the same time, we have to compute the book profit. It is the similar procedure here. Add proposed dividend, provision for unascertained liabilities, general reserve, income tax, but less general reserve amount withdrawn, and brought forward loss or unabsorbed depreciation as per books of account, whichever is less is deducted here. So 60,000, whichever is less, brought forward loss or unabsorbed depreciation. We don't have to deduct capital gains in this. So here we will get book profit 17,40,000. Now gross total income or the total income is 9,40,000. On 9,40,000 at the rate of 25%, and book profit 17,40,000 at the rate of 15%. So we shall see the computation of tax liability. Tax on total income 9,40,000. Tax on long-term capital gain at the rate of 20%. It comes to 44,000. So from 9,40,000 we should deduct 2,20,000 long-term capital gain. So we will get other income, that is 7,20,000 at the rate of 25%. It comes to 1,80,000 and the total is 2,24,000. Add surcharge is nil. Health and education cess at the rate of 4% on 2,24,000. It is 8,960. So the tax liability is 2,32,960. Now the tax on book profit. Book profit is 17,40,000 at the rate of 15%. It comes to 2,61,000. On 2,61,000, health and education cess at the rate of 4%. So we get tax liability 2,71,440. Now 2,32,960 and 2,71,440. So the MAT, minimum alternate tax, is more. Therefore, the tax liability is 2,71,440. Now as MAT is considered as the tax liability, the company will get MAT credit. The difference of amount, that is 2,71,440 and 2,32,960, the difference amount will be given to the company as MAT credit. These are the references. You can refer to these books and get some additional problems, learn new problems.